Hello traders, and welcome to the fourth video in my Fibonacci trading series. In my first video we went over how to buy into an uptrend using Fibonacci retracements. In my second video we talked about overlapping Fibonacci's for good spots to buy. And then in my third video we went over Fibonacci extensions, which determines profit targets for getting out of the market after we bought. Today we're going to be talking about when to and when not to buy into a Fibonacci retracement. I've gotten the question many times of when should I put a buy order out at the 61.8% retracement or the 50 and get into the market. And when should I not do that? And today's video is going to use strength of candlestick, so basically how strong a candlestick is, and also looking at volume. And I have a 10 moving average on my volume, by the way, to determine whether to buy or not to buy into retracement. So if you haven't seen my videos on candlestick practice or on trading volume, then I would recommend you check those out before we start this video. Okay, without further ado, let's look at our first example. So in our example here, we have a uptrend that's decently strong, and then we have a retracement to the 61.8, where we have a low tail, and we have a bit of a morning star formation here. Let's first examine the volume of this downward move to determine whether or not we should buy into this. Up here, we can see that this is an evening star formation. This price goes up, and then doji, and then bearish engulfing candle, and this looks like a shooting star as well. And if we look at the volume here, it reveals a lot. This bearish engulfing candle had a large amount of volume, and also this bullish candle that failed to reach the open of this candle also had a lot of volume. And this showed weakness of the bulls. We had a bit of consolidation here, not so much going on, but you can see during this consolidation period that the bears were much more prominent than the bulls. As you can see, the red candlesticks are much higher than the green, showing that the bears are in control. And we can also see many high tails. And high tails show weakness in the upward direction, showing the price will likely move downward. And then we can see that there's a bearish breakdown, which occurs right here with great volume here, and then we have even better volume here. It's important to note when looking at candlestick strength and volume that volume is an amplifier. And what I mean by that is if there's a very weak bullish candle on very, very strong volume, that is a very bad sign for the bulls. And same with bearish candles. If there's very, very strong volume on a weak bearish candle, for example, like here, then that shows strength of the bulls, not weakness. So think of volume as just an amplifier. I think that's the best way to think about it. That when a candle does not have a lot of volume behind it, it doesn't have a lot of agreement on it, and it is not as important. But when candles have a lot of volume and are quite strong, that is a very good indicator that price will continue going in that direction. Without further ado, let's look into this example again. Price comes down to the 50% retracement. We get two weak bullish candles with high tails, as you can see here, and not that much volume. And then we can see that we have a bearish engulfing candle here on strong volume, and then a doji here on strong volume as well, and then a not so strong bullish candle here. Now, do you buy or do you not buy into this retracement? I would say this would be a very bad spot to buy. And the reason being would be the bearish volume going downward. There's many more people here selling with this retracement than there are buying. And if you want to buy into a retracement, you need to see buyers beginning to pick up. And you don't really see that here. You see that the bears are in control. And as a result, this happened. This would have been a very, very bad spot to buy, and you'd probably have to exit the market here on this strong bearish volume candle here. Let's go to our second example. Now, in our second example, we have a similar situation. We have strong bearish volume downward, as you can see here. Some high tails here, and then this bearish engulfing candle. And then we get this. It doesn't really respect the 61.8 retracement, but it does respect the previous resistance here, as you can see. And you do know that previous resistance becomes future support in future uptrends. So this might be a bullish example right here. But if you look at this candle right here, price was not able to close past the 50% of this candle. That is a very bearish sign. And if we want to know how important that candle is, we just look at volume. We can see that volume at 6,215 was much higher than the average volume around 1,500. So this candle is about 4 times more important than the candles before it. And it's quite weak too. So I think right here would be a bull trap where people would buy and then they would get this, which would have been just terrible. So the telltale signs of a poor retracement that will probably not move upward is strong bearish volume and weak bullish candle with high volume. That shows just weakness of the bulls. And then price kept going down and eventually came up here. Now let's go to our last example, our third example. And this will be on the 4-hour chart instead of the 15-minute. So if we look here, we have strong bullish volume going upward. We have a tweezer top here. Price slowly comes down on not so strong volume, as you can see here. And there are many tails. There's 2 tails here with about a tweezer bottom kind of feel to it at the 50% retracement. We have a weak bearish candle here, a decent bearish candle here, and then a decently strong bearish candle here. Not too strong though. And then we also have a strong bullish candle here at around the 61.8 retracement. And you can see here that this would actually be a good spot to buy. Reason being is that there's just not that much strength downward. And when I say strength, I'm looking at the combination of volume plus how much the bearish candle goes down, and their tails too. With all these lower tails and with not too much volume, as you can see, none of the volume was above the moving average. This would be a good spot to buy. And as you can see here, if you had bought at 194, you could have caught a decent uptrend. So we can see here that looking at these 3 examples of when to buy and when not to buy into a Fibonacci retracement, the leading indicator is volume. And the secondary indicator is strength of candlestick. So when you're looking and you're asking yourself, do I want to buy into this market? You need to look out when the price goes down, how quickly it goes down, and on how much volume it goes down. So that's going to be it for my 4th Fibonacci trading series video. And if you have any questions, feel free to leave them in the comments. See you guys later.